Okay, let me see here.
Let me make you a co-host. Yeah, I'll make you
Okay.
a co-host. That'll make it easier. Okay, you'll momentarily drop and come back in.
Okay, cool. Is that your assistant
Where?
that said this meeting is being recorded in such a beautiful voice?
I know it's just the software.
Oh, AI. Hey, do you have any like secret info on this UFO stuff that's going on that you can talk about?
Well,
Really?
all he does is that's all he says.
I'm really following. I'm a crazy person when it comes to this. I've been following this for years, and like all this stuff that's going on now, you know.
Mm-hmm. It's kind of fun to watch. Yeah, there's a guy on YouTube. His channel's called The Y Files. He does a pretty good job of producing videos. Pretty entertaining sometimes.
Yeah, he's good. He has his videos are really good. Well
Yeah.
done. That's where he talks to the goldfish, right?
Yes, Hecklefish. There we go. I think we need him in some of the training rooms.
Yeah.
All
right.
Just delay here real quick. We'll try to. All right.
See
Well,
here.
there we go. It's a little better.
Can you see my screen?
Yes, I can.
Oh, okay, good. Let me go to this. So you can see this this chart here.
Yes, you could probably go full screen, and I'll be able to get more detail. Yeah. There we go. Okay.
That's full screen for me.
Okay. All right. I'm still kind of learning the controls for this thing. Okay. I guess that's the best we could do then. Go ahead.
Okay. Well, first, let me ask you, like, what is it that you want to do? There's some extra things. I've been doing some back testing on this that I've kind of mentioned, like just kind of tweaks to the way that I probably said I was doing it last time we talked. But is there something particular that you want to hit first, or hit it all?
I'd just like for you, let's just say that this is the first time I've seen the system, and you're going to give me an overview from it. Of course, I have a basic, actually fairly advanced understanding of futures, so you don't have to do this is a futures contract, so all that stuff. Just basically working the system or what it is.
Okay,
let's try it that way.
Okay, cool. So I'm going to start off with the E-mini, the Dow, the MYM. We're using the micros. We use the micros. I say we is me and myself and I. We use the micros during the normal trading hours, and then in the afternoons, like when the market reopens, sometimes I'll wait for an hour. The market reopens at 3 my time in California. I wait for an hour, and then sometimes I'll go in there and I'll trade the minis because it's super slow, and the minis seem to be not as hazardous and dangerous as during the normal market hours. But I guess let me just kind of let me zoom back on this. I'll just show you. We'll just do a back test. And these things here, Tom, you're a member of that room now. So these are turn signals that you have access to for Ninja and for TradingView. And these just represent potential turns once the color stops. And the blue is basically oversold. So blue means it's probably going to go up, and red means it's going to go down. And I mean, it doesn't work like any indicator like all the time. But so the way you would use it is like after this one's a good example because it's so perfect, but you can see that it kind of missed these. I guess after each of these, there was sort of a plateau that it kind of went sideways on. But this one is like ideal. This is one that he would want to show with like how this works. So the blue band from the indicator showed up here, and you would wait for the bar to go away, and then you would go long in theory. And then, so this is the long signal, and then there's red ones, which you'll probably see soon for the short. So let's just do a back test. I'll kind of show you the basic rules that I'm using now. And these are all what I've learned from going through the course, and as I found out later, misunderstanding some things about the course, and then being corrected by Brad. He offers you a Zoom with him. He's really good. I had one yesterday, and he cleared up a lot of things, new things for me. So I would try to book a call with him. He's great.
Yeah, I have talked to him one time. So yes, he's very good, very knowledgeable about the system. That's an incredible benefit.
Yeah. So I'm just going to do a back test. So this is how the thing starts off on 3 p.m. yesterday. Like today, see how it's really narrow, and it just starts to expand. Sometimes
Your
I don't,
audio is your audio was fading for a moment. It's good now.
okay. I don't trade every day after hours, but let's just kind of go as if I was going to yesterday after the hours. So you know how to do the back test. I hit replay. I find the time that I want, which is, so that's 3 p.m. my time. So I'll just go up to like 4. Okay, so I set my time to go at, this is yesterday, this is on the Dow. I'm gonna zoom in here on this. Oh yeah, here we go. So this is yesterday. See how it just really gets super, super narrow there at the beginning of the session, and then it expands. And yesterday was kind of a weird day too because of the Fed. Yesterday was crazy.
Yes, it was. It was just flat. Actually, the NQ was going down until the Fed announcement, and then everything just took off to the upside. It was crazy.
All right, so what I have in here on this, and I kind of find it helpful. I have, so these are just the 5 bands. It only uses the first one, just like the first red here. And I just set this up because I misunderstood what he was doing when I first started. I thought that I thought the further out it can get, the better, the higher the probability, which may be true. But so I would say, well, if he would enter here and it's up here, I'm going to enter up there, because that's better. But that's not necessarily the case. And that's not what he teaches. He only teaches this first band. This is where it starts is S1, and then that red mark there, that thick red line is S2. And the same down here, the beginning is S1 and the green is S2. When I first started off, I thought that I was to get in at S1. I thought if it comes up, I sell at S1 and then I wait for it to come back to this middle. But as it turns out, after talking with Brad more, he waits until the S2 for the entry, and then the target is this. And the other thing that I misunderstood was when I first started was his exit. I don't completely, I asked yesterday if he could do a video on just one underline of him doing exits. But essentially what he's doing is, so say it comes up here and you get in here, you go short, or actually let's do one down here. So if you go short on this one and it continues to move against you out here in the blue, he waits for the first possible kind of pullback or weakness to get out of that position, and then look for either wait for it to level off. These things, see how it gets real steep there? That's not a great time to enter when it's expanding. When it flattens out, like over here, like this is ideal, like a really flat line on both sides. These mountains, when it's growing, that's like, well, as you can see, that's problematic with those. So I'm just going to go ahead and start to do like a back test. So the main thing that the last couple of weeks, I got fried pretty good a couple days on these type of days, like during the trading session when it was just kind of hugging that red line, which is continually climbing, or just out here continually climbing. And so what the method that I came up with, it's sort of like, I think it's sort of similar to what I'm doing with his exits, but I just came up with a rule before I did a back test that said we enter at the red line, and then if it stays inside, we're fine. If it goes down, that's ideal. We make our profit. But if it continues up and moves against us, if it prints 3 to 4 of these blue dots outside of that, like in the blue or higher, then I get out. I just exit the position at a loss, and I wait for it to come back in and plant 1 or 2 back inside the red. Then I re-enter. And that kind of back testing those Fridays, that helped, because a lot of times you'll just stay outside and just keep climbing. But let's just start like a back test here at this is at 4 p.m. my time yesterday. And we probably won't go all the way through. Let's do a little bit here, then maybe go to the actual session this morning. So that's one of those turns that you have access to that signal, and that basically saying that it's overbought there. So I'm going to wait for it to hit that S2 line, and ideally we're still on too much of a climb. See that climb there? That it's not flattened out. So
yes, I see it. Yeah.
So that's probably best not to get in at that point. I wanted to flatten out a little bit. just continues to expand. I'm gonna speed it up a little bit, I think. Okay, it's starting to flatten out now on the outer edges there. See, that's more flat now. So I'm gonna look for, I'm gonna wait for it to hit one of those lines. Sell. But you can see it didn't really do anything. It didn't work. So they're not, sell doesn't always work, but it sort of gives you I like them because it gives me sort of a caution. Like it adds to the pile of, should I do it or not, you know? And you can see how
That
it's
was a big
hugging,
one.
yeah. And you can see how it's hugging these. So it does touch those, crawls along those a lot, which I like to use as a potential exit if I want, you know, in addition to the other ones. So this thing's just, what time are we at now? We're almost at midnight. Let me go. And
Yeah, I'll
since you-
confess that I don't have a lot of, there we go. We're in there now. I don't have a whole lot of experience with the Globex session. So it's something I'd have to do some back testing on, definitely.
So luckily it stopped right on, that's close enough. Let me close this. And so we'll take one. So it hits that red line. So we'll go short there. And then for this, I'm just going to use that like $50 loss for this, right? What we're doing right here. And again, this is the micro. So I should have put a mini on, but it would be 10 times. So 10, that'd be like $100 with a mini. And so there would be the exit. So with a micro, it's $16. And again, that's because it's overnight, it's a lot slower. But if that was a mini, which I do a lot in the overnight, that's 160 right there. So I'm going to flatten that. Now, as it goes down, there's another good discussion I had with Brad yesterday. So he was saying, you know, don't be afraid to enter 4 at this line here. And then if it goes your way, you can use this first red line as to exit one of them. So S1, you would exit one. You could exit another one anywhere you wanted, like on these if I wanted, or I could wait to exit number 2 on this middle, the main exit signal. And at that point, we're also taking our stop that we set up here and we're placing it below where we got in. So if the thing moved against us, we just break even on the 2 that are remaining, or the 3 or the 2 that are remaining. You have 2 now because we got out of one there, you got out of one there, you have 2 left, you get out of another one there at that red or this green, whatever you want. And then just take that last one and just let it run with a trailing stop for the rest of the day, because who knows what will happen. You know, you can it could be a big gigantic move like yesterday and make a fortune on it, but you're still protected by the stop that you have in there and or the trailing stop that you have on that. Does all that make sense?
Yes, it does make sense. I'm actually just running I'm taking some notes as you talk through this. So
Okay.
it's all good. Yeah, it's making sense though.
Okay, cool. Okay, so that's the overnight. Let's start over and do like the beginning of the day today. So let me zoom out of here. Okay, so for today, we started at 6:30. So this is the regular day session, which I only use the micros right now, which everyone advises to do in the room as well. All right, so let's go with this. So this is the market open today, or it's 15 minutes before the market opens. We'll let it go here.
I usually like that hour before the market opens. There tend to be some fairly smooth, fairly long trends during that time, I've discovered. I'm keeping that Renko, that what he calls the brick wicks, on a separate chart in NinjaTrader. There tend to be some pretty smooth trends during that time.
Right.
You just have to make sure your trailing stop is far enough away that you don't get caught in a sudden swing down and back up in the foundation course.
Yeah, and I used to, I've gotten a little chicken after back testing. I used to just kind of blow through news events, unless it was like a Fed announcement or something. But even those 5:30 or like the 5:30 announcements or 5 a.m. announcements, After back testing a lot of this, personally, I found it better to just be out during those. And then like if it's a big move up or down, then maybe get in after that move, but not be blown out, potentially blown out, as it's like right before it happens.
Yeah, same thing here. I'll wait at least 2 or 3 minutes before I get into a trade there.
All right, so here we go. So this is the morning. Let's see if I slow way down. Could have been, that probably was an entry, but I don't know if it's better to enter now or go one more tick.
I would be tempted to wait until it doesn't really get down and touch the green yet, does it?
Right, but it
The solid
did.
green.
I mean, it showed that it did, but it's like within that minute period of time, it will. I guess you need to decide: do you want to wait till it plants and like prints like forever, or if you're going to follow it? Because as it's live, you can see this thing is constantly moving. See how it's just moving, even though it's on a minute.
Yes, if you were to do that on a regular candle chart, you might see that where like if you're on a 2 minute, you might see where it goes down and actually crosses that green line and comes back up. That might be a decent entry.
Yeah.
That might be something I might want to play with.
Yeah. All right. So let's keep going here. And if that was one of those situations where it did hit that green line back there at the open, that would have been a nice trade right there. But we'll just keep going. Okay, so we're getting down here. It's pretty close. Okay, I'm gonna now see that was a touch. It's just, did you respond? I was trying to figure out a way if there's a way to back this up like by one tick, and I couldn't find anything. But if you know, let me know. That'd be great if I could just go back one tick.
Yeah, I actually looked into that, and the answer is no. You pretty much have to start the simulation over.
Okay.
Yeah, I saw the touch there, then it bounced back up again.
Yeah. So usually when I'm just doing it on my own, if I see it touch, I just take it, so it's not super accurate, but I haven't taken it yet. I'm going to see if we can, I mean, all these, there were touches in there that would have been nice trades through all these. But I'd like to try to see if I can show you what this thing looks like when it goes outside the bands and you exit. Let me speed up a little.
Yeah. Okay, yeah, there we went above the actual for just a moment.
So, he says there's no trades that are, at least when we're starting off learning this, there's no trades made in this white zone. That's the no trade zone, or the muck. He calls it the muck. So of course we exit trades. We take profit targets there, but we don't enter trades there. But he will sometimes use this as enter trades, like if it comes down and bounces off. But he just advises not to unless you have a better understanding, just more experience, Okay, so I think that there was some burn. Let's see.
Yeah, I think that's one of the issues a lot of beginner traders, and even intermediate traders have, is they try to enter when they shouldn't try to force things. You need more time in front of the chart. Just like a pro athlete needs more time in the weight room before they're ready for major leagues. It's the same basic deal.
Right, exactly. So I'm going to take this one. It's super close, and in reality, it could have very well touched that. So I'm going to take that for back testing purposes here. So we sold it that S2 thick line, and let's see what goes on from here. Now see how it's kind of touching that line? Just kind of interesting to keep in mind, Like if I had 4 contracts, I may have taken one, so really super quick scalp there on just one of them, or not, but
something
okay.
worth testing sometime. I see you only have, looks like, one contract on at the moment.
It's coming down here. There we go. So that's out 33.
Nice little profit.
Yeah. And again, if we had 4, we could sell them out slowly and still have some running. Let's see if we can get into some trouble here.
trying to get back down to that red zone. Yeah, in this case, that would have worked out really well. It's
Yeah.
definitely got back into the red zone and make it down and touch across the green line now.
So in reality, I probably would have taken a buy there, but since I can't back up and actually do it, I'm just going to buy one right here. But it'll be a little bit better than reality because we would have bought up there and we would already be at a little bit of a loss. But until I know how to fix that, let's see where we go. Okay, so here, 23. My stop loss is 50. Let me get it so we can see it. And we've printed 2 bars out of the red, right? One in the blue and one there. Let me go one more here. Okay, that's 3 out. So 3 to 4 is when I trigger that rule. Oh, I guess we could, but I guess a lot of it is also like the dollar amount that we're down. So we've been out now 1, 2, 3, 4 technically, but we're down 50 cents. So I may not in real life on this one. Let's go one more bar and see what happens. So we're back in. So we avoided that. However, if these bars would have printed 3 to 4 bars outside and we had like a $10 loss, maybe 5, but let's say 10 or more, I would exit out of that and wait for the thing to move back into the pink to re-enter. And that's sort of like what he's doing with his exits. He's just doing it more elegantly, I think. So let's keep going. You see it hitting that red line there. And I get a little impatient sometimes too. Like in real life, I may have been out of this already, but it would have paid off to stay there. So we would have gotten out there about 38 bucks. So I'll flatten that. Is this pretty much the way that you're seeing the system?
Yeah, pretty much. It does give a lot of clarification too. Basically the only thing I've been trading at the moment is I've been doing the trade at return system, but only in the main direction of the 233, the T line as he calls it.
Yeah.
And even that changes because you have it shows up different, of course, when you're on a Brickswick chart than it does on a 1 minute, a 2 minute, a 5 minute. So it's a lot of moving parts there. So I'm still learning, but I did okay this morning. Just one micro contract. I was looking at the ES, so I hadn't seen the MYM yet. So did okay on it though.
I think a bit. So this is the S. So here's a good example of how that 3 thing outside works. So this is the ES, the MES. So this is this morning. So you can see we would have got in right here. We would have taken that. So we would have bought there. And then it's kind of hard to see, but there's one blue out. I probably wouldn't have gotten out. I would have stayed in this through this. But then out here, you can see it's kind of hugging it on the outside. And I guess you could technically, after it prints 3 to 4 times outside of that green line or red area, you could get out. But let's say you were even not quite ready to do it yet. At this point, you're 1, 2, 3. So I would get out there. And then as you can see, I'm glad that I would have, because it just keeps going down, and it doesn't come back and it doesn't print inside that red or that green line until right here, which would have been a nice trade back up. Does that make sense?
Yeah, I was actually just measuring it on my chart. That's almost a 22-point move down there. So that was a large move down, and on a micro that would have been $5 a point. It'd been over 100 points down. It would take some nerve, at least for me, to stay in that thing. That's for sure.
And there's probably variations on that. I did a back test like over a 2-week period, I think, with like waiting for 5 or 6, and then another one with 3 or 4. And the results seem to show that the sooner you get out, the better, especially with a small loss, because there's not much you're losing there. And even though it's like play money, my brain is really like fighting the urge to just take it off for a loss and wait. It's so weird. But that's what that book, that Tom, whatever his name, that Best Loser Wins, he talks a lot about that.
Oh, Tom Hugard, yes.
Yeah.
Yeah, and he says that's one of the issues that a lot of traders have. You cut their winners and they let their losers run, which is the exact opposite of what you should do.
Yeah, exactly. It's all mental. Maybe it's because I read that book. I'm aware of it, but I find myself really like trying to fight the urge to take like a little tiny $10 loss if it just kind of comes out here. But if you step back and think about it, I mean, why? First of all, it's play money. Second of all, I mean, the smaller the loss, there's a million fish in the sea, right? There's a million trades. You have plenty of opportunities, so it's not like you only have one shot that day.
Yeah,
So,
and my son and I, when we watch these things, a lot of times we'll be in a trade, we'll hit our profit target, or we'll think it's going to turn around, so we'll get out only to watch it continue on for quite some time. And that's the attitude we take. There will be another trade. We'll get it back.
yeah, there's so many opportunities, Well, there's Zooms on Thursdays too that are I'm gonna try to hit today that Brad runs that are probably
Yes.
really good, helpful.
But, yeah, it starts at the top of the hour. Yes. Yeah, and I also appreciate. I wanted to say it while we're here. I appreciate your thoughts on the prop firms too, trading with like Apex companies like that. I appreciate that because it does kind of make sense. Let them take the risk with their money. Because you're also incentivized to make sure that you have a profitable system. So that was a good thing.
Yeah. I think it's ideal for learning, like for my son and even for me, rather than put my real money on the line. And there's sort of a reward there. Like if I was just to like be paper trading this every day, it's sort of like there's no real there's no goal really at the end, where if you're basically paper trading risk free with the reward of getting a funded account, that just makes it more real and make sure you really want to do it every day. Yeah, those prop firms, that setup is really a great program, I think. A good opportunity for us.
Yeah, I've been paper trading this system and of course the TTC stuff too for some time. But what it comes down to is eventually it does kind of get boring, and so you want to eventually start doing the real money, which I've started to do that now, and it's a lot more interesting. Also discovering I'm a lot more careful. Risk you'll take on a paper account is just like, no, I'm not going to do that. This is my money.
Right.
So you're also doing, I see you teasing a lot of options stuff in there.
Yeah.
The zero date expiration stuff and all that.
Well, that 0 day thing, I make videos. I'm just doing like a live trade every day, every morning, and just recording the session and put it on YouTube. And that thing is, well, I probably, now that I'm talking about it to you, I probably just jinxed it. It's probably gonna go to the crapper now, but
let's hope not.
Yeah, but there's the ability to make, well, let's see, 12%. So a basic trade makes 12%, like $50 on $410 of risk. So that's 12% each day. There's going to be losses in there, which are 2 times. But that's kind of the whole reason I'm doing the series on YouTube, to see it really play out with real money. But it's, if it holds up, I mean, you could make in 4 weeks, you could double your money. And the idea is to like do the first cycle with risking your own $400, and then once you've made that $400 back from doing the trades for 3 or 4 weeks, you like the casino thing, you take your money off the table and then you're just playing with their money, and then you start to scale if it continues to hold up. And don't tell anyone, this is a secret.